Welcome to China Money Podcast. My name is Nina Xiang. I will be your host for today's program. It's Thanksgiving today, so I hope every one of you are enjoying a great holiday with your families. I'm in New York City traveling, and I will be here for the next few weeks. For those of you who are listening to the podcast for the first time, China Money Podcast is a weekly podcast that focuses on investing in China. You can subscribe to our podcast on iTunes, or you can go to our website at chinamoneypodcast.com, where you can see all of our past archive podcasts. And you can also see some of the video podcasts that we have for certain programs. You can follow us on Twitter at China Money Pod, or like our Facebook page. That would be very helpful. Thank you so much. For today, I'm very excited to introduce veteran investor Jim Rogers, chairman of Rogers Holdings, author of A Gift to My Children. He's talking to me today from Tokyo. Hi, Jim. Welcome to the podcast.
I am delighted to be here, Nina.
Are you celebrating Thanksgiving in Tokyo, or it's just another busy day for you?
It's another busy day for me. I haven't seen any turkeys here at all, but it's I love Tokyo, so I'm glad to be here.
Since the podcast is focused on China, let's start here. We'll get to your perspectives on the big pictures later. Just last week, you were in Shenzhen at the China High Tech Forum, where you said the Chinese stock market will continue to slump in the next 2 years. What's your reasons for that call?
Well, I'm not quite sure it's exactly what I said. I said that the world economy is going to be having troubles for the next 2 years, and it'll be difficult for the China or any other stock market to do well in that kind of period. I own Chinese shares. I own a few Japanese shares, not many Japanese shares. I'm mainly short shares around the world. I've shorted American technology companies, I've shorted European stocks, and I've shorted emerging market stocks. China's going to have a problem, but that's the whole world's going to have a problem. That was the point that I was trying to make. See, after I made those talks in Shenzhen, one of the reporters wrote that I should consider getting a permanent translator in China because she said that the translation was not very good of what I had said. So who knows what I said when you start reading the translation. Something is always lost in translation.
That's true. But the Chinese stock market is already very low. Do you see that it's going to get lower even?
Well, all stock markets fluctuate. Stocks, in my view, in most countries, are like they were in the 1970s. In the 1970s, stock markets and economies around the world didn't do very much. They were, in a big sideways trading range for many years. We're in that kind of period again. Yes, it'll go up sometimes, it'll go down sometimes. But basically, I don't see a resumption of the bull market in many places in the world until we have the next economic problems in the U.S., which will be fairly soon, the U.S. and Europe.
Because of U.S.-Europe, China's economic outlook might also be compromised. But do you think the Chinese economy will be able to achieve a soft landing, whatever that means?
That's a very good point. Whatever that means, very insightful. Some parts of the Chinese economy are going to suffer a hard landing. You're going to see real estate investors going bankrupt in some cities. But on the other hand, some parts of the Chinese economy will not even know that real estate speculators are going bankrupt in some parts of China. Water treatment, agriculture, many parts of the Chinese economy are going to be booming, even though some other parts of the Chinese economy will be going bankrupt.
Where do you see the most vulnerable property market in China right now?
Well, the urban coastal cities, Hong Kong, Shanghai, Guangzhou, the cities where the speculation was the worst, and that's mainly on the East Coast and the Southeast. That's where things were the worst, and so that's probably where they will be they will go down the most, and you'll have more bankruptcies.
Suppose the property prices in those places you mentioned do come down a significant amount, maybe 20%, 30%, or even more. What kind of impact do you see that will have on the Chinese economy?
Well, it'll have some effect. It'll certainly have an effect on the people who go bankrupt or people who are in the property business. But what's happening in China is nothing like what happened in the U.S. In the U.S., we had people who could buy a house with no job, no money down. In fact, they could buy 4 or 5 houses with no job and no money down. And then the banks took the mortgages and leveraged them even more. That's not happening in China. You cannot buy even one house with no job and no money down. So yes, there are going to be people. You have a price problem, a bubble in China. In America, we had a huge credit bubble, perhaps the biggest credit bubble in the history of the world. So some people will suffer badly, but it's not going to permeate the whole Chinese economy the way it did in the UK and the US.
You think the impact of a property slowdown will rather be contained?
Contained? No, it won't be contained if you're one of the people who goes bankrupt. Many people are going to suffer badly.